And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this, of course, is the show where we bring you where the action is. So let's go ahead and get started. Another busy week, although we did fizzle here toward the end, but lots going on underneath the surface. So we're going to take a look at the current markets. Know that backdrop. Are we in a confirmed uptrend or not? And then I'm going to talk about the move into cyclical stocks. That's going to be industrials, financials, materials. And we're going to take a look at how you can uncover some of the leadership names that are kind of emerging out of these newer cyclical industry groups. And then also the leading stocks, particularly high growth names, they did experience a pullback that started late last week into this week. So I'm going to review with you how you can, what I call, manage the pullback. In other words, some stocks are finding support. They look very viable here on this pullback. Other names, not so much. So there are distinct ways that you can tell the difference, whether that pullback is just that or is the stock headed for more near-term downside. And then consumer-related stocks, we did get news today, certainly relating to retail sales, but there are pockets of strength that we're going to talk about. And it's not just retail, it's also consumer staples as well. So we're going to take a look at that. And as always, I like to share with you some of the more relevant, impactful news that occurred this week to help provide that backdrop as we talk about what is going on in the markets. So over the weekend, we could see U.S.-China tensions potentially pick up because there is going to be virtual trade talks that are going to take place, and it's going to be a review of already existing systems that are in place. Also, I talked about July retail sales, and it did pick up by 1.2%. So a nice significant improvement there. The weekly jobless claims, they did fall below that 1 million mark, and that's a number that a lot of people are pegged on. So it is viewed as constructive that we did see a drop. Also, stimulus talks. Unfortunately, we continue to be at an impasse. That is what a lot of analysts are attributing today's malaise to in the broader markets, because of course we would like to see more movement as far as going forward with stimulus talks, with an eye toward a continued recovery process for the broader markets. Another news item here, China, their retail sales fell, worthy of noting for multinational companies in the US that sell into China. Also, China's really being closely watched simply because they not only got into the coronavirus initially, they also were the first major country out. So all eyes on seeing how their recovery progresses. So that was certainly a news item worth noting. Let's go ahead and take a look at the broader markets as usual, a daily price chart of the S&P 500 index. And quite simply, while the S&P was mostly flat, up almost 1/2 of a point for the week, we are very much in a confirmed uptrend as the index continues to find support above this upward trending 10-day simple moving average. And then the RSI is positive. I can go ahead and share with you the stochastics, which are a bit faster moving, but it is another impactful momentum indicator that I like to use for these broader market indexes, and we can see the stochastics are also positive, and we're continuing to inch closer to that all-time high for the S&P 500. Let's go ahead and drill down a bit further. Of course, we want to see, as always, we want to uncover where the relative strength is. Where are the money flows being funneled, because these are the areas where you can take advantage of these moves and take advantage of the strength in that given area. So what we have here is this candle glance view. In addition to having the S&P 500, we also have each of the 11 underlying sectors that are listed here. I've gone ahead and added this RSI momentum indicator, and I want to sort it in descending order. Show me the strength up here on the upper left, and then as we drill down, these are your weaker sectors, lower right-hand corner. So let's take a look. Consumer discretionary, I talked to you about retail sales. It's continuing to power to new highs, really super strong, up 2.3% for the week, and that's relative to a more flat area elsewhere. So we're going to get into some of those names because there are areas that are continuing to march to new highs with that industry grouping. Industrials, they were the top performers, up 3.2%. Let's just take a quick look here because we did identify last Friday this bullish break above this 200-day simple moving average. Industrials have continued to add on to that, two specific areas that are driving it, and we are going to get into that as well. Let's go ahead because let me get back to that RSI descending so we can stay on track. And I talked to you about consumer staples, and it's an area that for the most part has been a bit ignored here of late, but take a look. This is a very confirmed uptrend hitting new highs. There are two areas here that are definitely worth noting among the staples area as we consumers are continuing to order online, and you'll see the relevance there as we get into that group. And taking a look here, I talked to you about material stocks, a lot of steel related, building material related stocks, internet, and what I did want to point out to you is XLK. Now, the sector was flat for the week, but not entirely unanticipated because last week we did power to that new high. The beauty is it's finding support at this upward trending 10-day simple moving average, so the pause appears to be shorter than initially anticipated in those technology. And then as we drill down here, we can see real estate utilities lagging. So that's very consistent, of course, with what we're seeing in the markets. What I want to do from here is take it a step further, candle glance view again. So from here, we have each of the broader market indices, the NASDAQ, the Dow. We also have biotech ETF, semiconductor, a lot of these growthier areas that I traffic in and really pay close attention to. Also put in the VIX and gold as well. So again, RSI here, descending order. We're just going to go ahead and update, and let's take a look at this area that's in the forefront. We talked a little bit about this last week, but this is really a significant move among transportation stocks. They popped on Monday and kind of fizzled for the rest of the week, and a lot of this has to do with positive, constructive traffic news coming out of airlines. So we are seeing a firming up among airline stocks. We'll get into that as we move on. Taking a look at some of these other areas, small cap stocks, they were up about 6% last week, and we can see they had a little bit of a move this week, a little more than 0.5%, but really digesting last week's big move. But nice to see this broadening out of participation into transportation, into these smaller stocks, and for the most part, earnings driven. I did want to share with you TNX is the ticker for the yield on the 10-year Treasury. Take a look at this pop because a lot of action in the markets elsewhere has been driven by this super low interest rate environment. I'm talking about builders, lenders, and so forth. This pop up this week is due to the fact that the U.S. Treasury had several auctions. They are looking to raise, in fact, they had record as far as the dollar amount, I believe $38 billion in the 10-year that was auctioned off. So a lot of supply in the Treasuries, demand a bit weak. So hence we are seeing an uptick here in the U.S. Treasury yield. That's going to have an impact potentially on bank stocks, which fare better in a higher interest rate environment. And then again, as we drill down, this is something over the last 3 weeks, I've been sharing with you this seeming topping action here in biotechnology stocks as they continue to underperform here. So we're going to keep our eye on that because a lot of positive events taking place among these innovative technology, biotech companies, but unfortunately, the market is looking the other way. So let's do this. What I also would like to do is share with you we're going to go to this first initial page here on StockCharts.com. This is an exercise. If you don't already, they have a wonderful layout here. It's really very, very helpful if you want to get your arms around the markets very quickly and see not only here what the broader markets are doing on a daily basis, but you can get the most active percent up, percent down information for any of these indices. And you can modify this format. This just is what works for me. But what I really wanted to get to here is the Dow Jones Industrial Average. It was up 1.5%. So another significant week for these industrials. And so we can see percent up quite simply is that percent. Most active is going to be your higher volume stocks. So in essence, 30 names are populated among the Dow Jones. So you can go ahead from here to a candle glance view. But what I've done is gone ahead and created a list of each of the 30 stocks among the Dow. So in other words, the Dow Jones Industrial Average is on the move. Let's see if I can solidify that by sharing with you their group chart here. This is the Dow. We can see that it's hitting a near-term high and digesting this significant 2-week move that we've seen. So from there, with an eye toward getting in front of, or certainly being aware of, where the relative strength is among the Dow stocks, I've gone ahead. These are the 30 names. RSI, we want to see where that strength is in descending order. So for me, not a lot of surprises here. I'm running screens regularly every single day and have a very, very good sense of what is taking place. But I thought I would share with you some areas that might surprise you. I talked about consumer staples. This is Procter and Gamble. So take a look, and at first glance, the move upward was considered to be because consumer staples, whether it was toilet paper, other paper products, and so forth, but it is continuing to advance. I'll tell you one area that is strong, and again, hopefully we can get to some other names, is cosmetics. And surprising, they're seeing a lot of vibrancy. Reports out that that area, certainly among consumers, that it did bottom in April and May. Let's take a look at a couple of other outstanding names here. Again, this is your strength to your weaker areas. Apple, Nike had a nice pop on Monday, nice base breakout here. For those of you that might not be familiar with that, one other name that we have to take a look at is Walmart. It's firming up really quite nicely ahead of their earnings. So put that one on your radar. And then as we drill down, here are your weaker names. And it may surprise you to see that Microsoft is down here. They did hit a new high in July, and this is in line with what we're seeing among other recently leading software stocks that hit or came close to new highs at the beginning of August, but are now pulling back. So that would be a bellwether example there. Cisco came out with poor numbers. So I did want to do that. We're going to take a very quick break. When we get back, we have lots more to. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. I mentioned to you the concept of being able to get in front of the leadership names, or certainly those stocks that are on the move, with the continued money flows into these economic recovery cyclical stocks. So we are going to do just that right now. So what we have here is the sector summary here, and based on the weekly performance, you can really sort this any way that you please. So let's go ahead. We are going to start with industrial, then I'm going to drill down into financials, just to give you a sense of how you can really get in front of what is happening. So here we are again on the week to date, or 1 week performance. And delivery services, I spoke to you about this last week as an area of vibrancy. I'll tell you, this move is all about FedEx. Take a look, huge move, and UPS. They are raising prices. Analysts like it. So I did want to just take a minute here, and the scooter rating is your StockCharts technical rating. The higher the number, the better. So airlines, take a look for, I mean, that is really anemic, quite weak, but you may be surprised. Let's go ahead in and take a look at some of this underlying stocks. Now, again, this is by performance this week. You can, of course, sort it by scooter, and you will see some of these names. I tend to like to focus more on larger cap stocks that have more liquidity, not as risky. So we're going to just take a quick peek, because 4.6 is awfully low for a StockCharts technical rating. So let's dig in. This is Delta Airlines on a daily price chart. So we can see this was that false recovery rally back here at the end of May, and it very rightfully pulled back. Airlines just had a very, very tough period, June into July. But more recently, as mentioned, they are reporting higher traffic numbers, as some areas people are getting out a little bit more. They're certainly being cautious, I'm sure. But more importantly, with this chart, we can see that this week, Delta Airlines broke back above this 50-day simple moving average. So let's take a look. Your stock hits a new high and then does enter into a downtrend. So these rally attempts during that downtrending period are met with resistance. This past certainly week and a half, we have now broken back above resistance, and we've done so on volume. So I would argue that these airlines are firming up. You're going to have to watch to see how they behave here at this downward trending blue 200-day simple moving average, but very interesting. So this is a look that you'll see among many of these, or certainly several of these airline stocks. It's not a play I would be interested in. I'm more, I want to see the stock having those earnings in place and being above all areas of resistance, but certainly worth noting. So one other area that we can just take a very quick look at here is aerospace stocks. Defensive, these are areas that generally would do well regardless of a potential slowing economy. So again, we can go ahead and sort this by this scooter rating. And there are a couple of stocks that are on my radar. Heiko, this has been a big winner for those that subscribe to my MEM Edge report. I'll just go ahead and pull up a weekly really quickly, and you'll see we've had two very nice runs with the stock. And on this weekly, you can see this week HEI is breaking back above this blue line, is now a 10-week or 50-day. My concern, however, is that fundamentally they do provide to Boeing, which is still not out of the woods yet. So I'm going to dig in deeper. Those of you that are subscribers to my MEM Edge report, you'll know when we turn constructive on HEI and other defense-related stocks. But this is another phenomenon that I am seeing among these industrials that bears reporting to you guys, because it's now broken above all these key areas of resistance. So things could begin to be getting really interesting for these stocks. Let's go back. I did want to take a look at, for instance, financials. the financial grouping was one of the best performers last week, up 1.4% this week, so well above the 0.5% in the S&P 500. So let's go back. Here we are, and take a look at financials. So from here, there are again any number of ways that you can sort. Certainly by scooter would be one way. So what I'm going to do from here is go ahead and share with you financial administration, rather a broad name, but a lot of payment processing type firms here. Going to go ahead and sort it by scooter, and I did want to share what I call the leadership names, and I think you'll see why within certainly this industry grouping. This is Jack Henry, JKHY, and the reason as we drill down, you're going to see a lot of financials that are down and out and just now starting to pick themselves up off the mat, but certainly this stock is really quite attractive, poised to break out. They did announce this week news of a loan brokering platform. Of note, they are due to report their earnings on Tuesday, so you do want to have that in the back of your mind should you want to consider the stock. CBZ is another one, another payment processor in the financial services industry, also poised to break out of the base. So what I did was go ahead and sort it by scooter to get two potential candidates. Now, let's take a look at banks. And I did mention to you that a lot of these are kind of down and out. Again, what I'm going to do is sort this by market cap. I would like to be in front of those stocks within banking that are larger. They're better capitalized, better able to withstand what is going on, certainly in the economy. So this is among large cap. This is going to be your leadership stock. It has a 76 in the scooter rating, well above its peers. Very familiar with this. I have alerted those of you from my MEM Edge report that are watching. You are going to be familiar with this stock because we picked it up just as it was beginning to turn positive here above these shorter term and longer term simple moving averages, well ahead of its peers. They have subsequently come out with strong numbers. So that is, I would argue, your leadership name among large cap stocks. Let's go ahead and again, I'm going to sort this by market cap, looking for those larger names. And you can see as we drill down, you are going to get mostly certainly lower as by way of some of these scooter ratings, but we can take a quick look at JP Morgan. My MEM Edge report has the leadership stock in this area as well, and it is not JPM, because we can see that in this case, JP Morgan has this rally attempt, and it is potentially going to find resistance at a downward trending 200-day simple moving average, similar to back here. So it's not going to catch my eye. I want the name in this investment banking large bank area to have already broken above resistance and have strong numbers on the table. That's going to be much more important to me. But for those of you looking to potentially play the turnaround in some of these stocks that could potentially just be beginning to turn, again, from my work, I am going to be more attracted to those larger cap stocks. And you can drill down here and you can see just how many bank stocks there are. So to have a system in place to be able to sort, again, by that scooter or otherwise, is helpful in bringing Credit Suisse up, because this week it did break positively above resistance. Doesn't have a lot in the way of liquidity, but this is going to be of more interest to me. So that is financials. I talked about consumer staples, so I would be remiss without diving into that area and sharing with you some of the more attractive, certainly, stocks. So again, this is by performance. Tires, that's not going to be very interesting to me, but personal products is one area that we can go ahead and drill down. I'm going to go ahead and sort it by that StockCharts technical rating. Again, quite simply, these are your stocks that are more technically sound. The higher the number, the better. Let's take a look at ELF. This is one of the cosmetic stocks that I mentioned and as having bullish characteristics. A couple of characteristics that I do like about this one, unfortunately, it is smaller market cap, but when you are looking for candidates, I like to see names that going into the pandemic were having hitting new highs due to growth prospects. But of course, a lot of these, this I believe was down 90% due to economic outlook, the sense that people would not need beauty products, but not the case. We're now all on Zoom. We still need to look presentable. So let's take a look. The stock is had hit a new high again back here in July, pulled back very orderly to this upward trending 50-day, poised to break out. I'm going to go ahead and share another name so we can move on to some of the other ideas that I mentioned to you as far as playing the pullback. This is Estee Lauder, EL, breaking out of this nice base this week. They are due to report their earnings next Thursday, but one of the major Wall Street houses upped their price target to 240 going into earnings, and that's generally a bullish signal. Now, let's take a look because I do want to share with you this concept of these stocks that are leadership names but have pulled back. I'm going to share with you maybe about 4 names because there are some that have been able to give the appearance of potentially coming back, but not all of them. So let's take a look at MTCH. Leadership name back here, and it pulled back very orderly to this 50-day simple moving average that was uptrending. So when you see a stock, it did undercut it very briefly, but it has historically undercut key support and been able to come back. So after this pullback period, it's going to be of interest to me when it breaks back above these shorter term simple moving averages, and you can see it has since gone on to trade higher. So let's take a look because I talked about software, some of these big winners that hit new highs. This is Fastly, FSLY, hit a new high, came out with numbers, and we can see it's really just languishing here. So from my work, I would need to see it break back up above, but we do have a negative RSI and a MACD poised to turn negative. So near term, FSLY, I would not be a buyer on this pullback. SPLK, another big winner going into let's see if we can pull that up, going into this month, but it did pull back, and it is another stock that does not look very attractive here, SPLK. And so we can see because it is broken below its 50-day simple moving average, RSI is negative, MACD is negative. I would argue more downside ahead. A couple of other names that do not look attractive on their pullbacks just yet. Form Factor, this is a semiconductor stock, hit a new high mid-July. Once it breaks this 50-day simple moving average, you're going to have just so much more in the way of upside potential resistance, but at some point, we will be on the prowl for that downtrend reversal, just not quite ready yet. MRVL, another semiconductor that is continuing to deteriorate after hitting a new high back here in July, so not very attractive. And one other area that I did want to, I'd be remiss to not share with you the strength in the, this is in the space of solar energy, PLUG, and a bunch of these are starting to and have recently reported their earnings. So we're seeing really nice moves. I would urge you to go into the renewable energy industry group on StockCharts.com and take a look at some of these stocks because they really are setting up quite nicely, and even more constructively, they are doing so after reporting strong earnings. I'm going to end it there. For those of you who have not already, please take a look at my MEM Edge report, keep you on top of the sector rotation as well as the top candidates. Have a great weekend, everyone. See you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.